After Synopsys reported its latest quarterly financial results, the stock price sank in response to the announcement. Investors want to know what's going on with Synopsys stock, why did the stock price crash, and what's a fair value to pay for this business. I'll share with you some of the details I discovered after evaluating the latest results from the company. I'll share with you what management had to say about the company's latest performance, and I'll reveal my fair value calculation for Synopsys stock using my discounted cash flow valuation model to calculate what I believe is a fair value to pay for this stock. I'll do all of that in this relatively short video, so let's jump right into it after a very brief message from my sponsor.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right, so Synopsys management team said that the third quarter was a very busy quarter for us. We reported our second quarter number on May 28th, and on May 29th, we got a BIS restriction that hindered our ability to sell into China. Of course, Synopsys is not the only company facing restrictions for sales into China and volatile restrictions, approvals, and then restrictions again. This is happening to many companies, including NVIDIA and AMD. So that restriction lasted for about 6 weeks, and they closed the transformative acquisition within the quarter, and there was a very short stub period that we needed to account for inside the quarter of roughly about 2 weeks. Then when the BIS restriction was lifted, it didn't mean that the customers in China quickly got back into normal purchases. There's a lot of uncertainty in China from semiconductor companies or system companies designing or needing IP to design chips that change the rhythm of selling. And that's also happened with NVIDIA and AMD. Just because they got approval or they got signs from the US government that they can go ahead and sell their chips back into China again, it doesn't mean that sales quickly restarted in China. In fact, they're still struggling to make sales into China. So it's not just a one-sided situation where as soon as the United States allows Synopsys to make the sales to China, all of a sudden sales start rebounding. No, because the sales were disrupted to begin with, the customers in China started to make other plans and looking for other options, and they don't want to rely on US companies anymore because they understand the volatility of the relationship between the US and China. And so they don't want to play this game anymore. They don't want to play the game of politics where they can, then they can't, then they can. And so they're looking for more permanent solutions and not relying on the governments to be friendly and allow sales to happen again within countries. By the way, I've made this document that I'm reading from available to my channel members, and you can join my channel for less than $5 per month, and then go to my YouTube channel page, look under the membership benefits section, and you'll see the link where there's a file of this document, this highlighted transcript, as well as dozens of other highlighted transcripts of my analysis of companies when they hold conference calls and when they hold meetings with Wall Street analysts. So the company saying that we will have a muted growth looking at fiscal year 2026, where the rest of the businesses are still operating and delivering a very healthy, nice growth in line with expectations. So the intellectual property business in particular will have muted growth, and the rest of the business will have healthy growth. And that's the difference the management team wants to emphasize. The rest of the business remains very strong and in line with expectations. It's the IP business that's struggling. So the sales to China are really hurting Synopsys, saying that that's a negative impact on Synopsys because we cannot sell our portfolio to that customer. They're uncertain. Their customers in China, they don't know what's going to happen. So they're asking, if I start a design and the chip investment, can I finish it? Or in the middle of the process, will I face restrictions and not be able to finish? There might be another disruption from the U.S. Bureau of Industry and Security or whomever for their inability to continue that investment. So that's having a negative impact on their growth in China. And actually, China for Synopsys was growing between 20 and 25% compounded annual growth for about a 4-year period. So it was a very important market for Synopsys. This year is going to be significant reductions from where they ended up last year. The same thing with their foundry customer. They're assuming there will be no customers for the IP that we built into 2026. So huge negative disruptions for Synopsys business in China. That disappointment is likely what led to the big stock price drawdown following the company's earnings results. And so my fair value calculation for Synopsys stock has the business worth $380. And even after the big stock price drop at $420, the stock still looks overvalued. Even after accounting for a margin of safety, it looks slightly overvalued at current market prices. So I have this stock rated as a hold, not a buy, and this interesting development should be considered by Synopsys stock investors. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.